How do you calculate out the home office deduction as a business owner? My name is Jim Martin, CPA, and I work with small businesses and self-employed individuals, helping them save on taxes. When it comes to the home office deduction, this is a great deduction that a lot of people miss. Everybody, more than likely everybody, has a home office or a space at home that you're using for your business. Maybe it's 100% of the time for your business. Maybe you have a different location and you come home and you do some work, just administrative work on occasion. Especially maybe you're an Uber driver. Well, obviously, your bulk of your work is done out in the car, but there's administrative stuff you need to do at your home. So you should have a home office. Well, how do we take that deduction? There's actually two different methods you can use to take a home office deduction. The first one is a simplified method, and you just simply calculate out the square footage of your office at home. Now that square footage, or that office rather, needs to be used exclusively 100% for business. So it can't be your kitchen table because that's gonna have a different personal purpose. Whether you actually use it or not for that purpose, it's set up for that other purpose, so it's not gonna qualify. But an actual office space, or if you're using a bedroom, it doesn't have a bed in it, it's just used for storage, things like that, that could qualify as well for your home office square footage. So once you calculate out the space and calculate out the square footage, you can apply it by a rate the IRS gives you, and that becomes your home office deduction. It's a very simplified equation, as the name suggests, and that is the easiest way to do it. Now, more than likely, the actual expense method, the alternative, is going to be a better option. In my experience, it almost always, or really it always, calculates out a better deduction. And the actual expense, now we have to take that a step further. Our square footage, we have to calculate that as a percentage of the entire home. So we take the total square footage for business purpose, and we divide that by the total square footage of the entire home. That's our percentage. We get to use that percentage on all the what we call indirect costs. Now, what is an indirect cost? It's cost that's for the entire home, and we indirectly use part of it for the business. What is that? That's your electricity, your gas, basically all your utilities, your interest and taxes. If you're renting the place, that would be your rent you're paying. All those bills that encompass the entirety of the home, security system, HOA dues. You really can take anything that it costs to own and operate the home, and that encompasses your indirect costs. Add them up for the full year and divide it by the percentage of business use, and that becomes your business expense, or your home office expense portion, indirect. Now, there can also be direct costs associated with that as well. And what is that? Well, that's going to be less common, of course, but it's any costs that are directly associated with that office space. So, for instance, you paint the office a different color. Well, that is directly to the office. You can pinpoint that specifically to that office space only, and that becomes a direct cost, and you don't have to apply the percentage to it. It's 100% directly part of the home office deduction. So any of those costs that you can put associated directly to the office is going to be a direct 100%. And we add those on top of the indirect costs. The other cost to add in, if you own the property, is you can add depreciation on top of it. And so you would take your home, you would depreciate it over that extended period that you get, divide it by, or multiply it, I should say, by the percentage of home office, and that is your expense there. Now, if you're doing that, some people don't include that, but it is technically part of doing the actual expenses. So you add that in. You do need to track that over time to make sure you're understanding how much total depreciation you've taken on your home, so that when you turn around and sell it at some point in the future, when you calculate out that gain, which could be taxable to you, there's some exclusions. That's a whole separate conversation on when you sell your personal residence. But when you sell that personal residence, if you've depreciated your house in part using the home office expense, you do need to factor that in to the calculation. So you just need to be able to track it and provide that to your tax preparer so that they can calculate that out and make sure you're calculating out the gain appropriately when you sell the property. So those are the three costs. You have your indirect costs, your direct costs, and your depreciation of the house. You add those up together, that becomes your deduction. Now, how you actually mechanically do that on your tax return is going to depend on what tax return you're actually filing. You're probably filing either a Schedule C, profit and loss from a business, or an S corporation tax return. The Schedule C, there's actually a separate form where you would itemize all these expenses out on the form, and it would then flow up into your Schedule C. If you're filing using the S corporation, there's not a home office expense for it. You would just calculate that out, and then you would expense it as part of one of your expenses on there, but you would have that calculation in order to support it if you needed to under audit or review by the IRS. Same thing, most people put it in as a rent expense for the home office, but the concept's going to be the same as long as you use the same methodology you would if you were self-employed and you're only taking that percentage of actual cost, then your calculation would hold up under audit. You just put it as home office, rent, however you want to put it on your S corporation, but you still get that deduction no matter what. So that's how you calculate that out. It's really a great deduction. It's one you're probably utilizing. It's one allowed by the IRS. Does it have a red flag? Some people don't want to do it because they think there's a red flag associated with the home office. I don't think there is. There may be, but as long as you're documenting it and have the correct support for it, there's no really harm in having, using the code as it is intended to use to make sure you're getting the right deduction. So I wouldn't steer clear of it, be afraid it's a red flag. It is specifically written into the tax code. Well, hope that was helpful. Hope you learned how to. The dogs are now getting rowdy, so I'm going to cut off the video. Thank you for watching. If you have any more questions about it, feel free to leave a comment below. Thanks again.